Did you know that falling interest rates can actually cost you money if you're not careful? A lot of people don't realize that. The people in every other sector in Australia have become better at producing more with the time they put in. But people in construction have become worse and they've actually fallen. So we've got housing demand and then we've got net housing supply. And as you can see at the moment, there's a massive gap. And they expect that gap to close over the next 5 years. That's what they're hoping to. That's their projection. I call BS on this. I don't think it's going to happen. Part of our group and what we do, I suppose, Positive Property, is we do a thing called group by advantage. Basically, when you're buying a property, when you're on your own, it's hard to negotiate the right deal. To do the due diligence is very expensive if you're doing it for one property. But when you do a group, then it makes more sense to be able to do the right due diligence. And then you've got better negotiating power, so you never overpay. Morayfield, um,
Yes.
what an
When you
amazing
said
return.
Morayfield, I was actually excited to see that. So
Yeah. So a 300% return. Now, that's not your average return, is it?
no,
No.
that's crazy.
Hello, George Markowski coming to you live. And I've also got Billie here with me. Today, we're going to talk about interest rates. Interest rates are down and what it means for property investors. So if you're watching live, type in hashtag live, and the people watching the replay will type in hashtag replay. We're going to live from our private group in Zoom through to all our platforms. We've got around 9,000 people watching us right now, which is pretty cool. And we've got about 40 people in our private group, which are our members as well. So tonight, this is what I'm going to talk about. Did you know that falling interest rates can actually cost you money if you're not careful? A lot of people don't realize that. So I'm going to go through that and explain why and how this can affect you and make sure it doesn't cost you money, because interest rates dropping, funny enough, a lot of people when interest rates drop, they're like thinking, yes, we're going to make money. That's true. There's winners and losers, but a lot of people actually lose money because of this. And the next thing is, this is the fact. Every 0.25% drop in rates boosts your borrowing power by about $50,000. So yet most investors miss this opportunity. So what else I'm going to go through tonight is skip this and you're at risk of costly mistakes, missed opportunities. And so that's what I'm going to go through. So stay till the end and I'm going to show you some of the suburbs that are actually going to be booming because of the rate drop as well. Now, for those who already don't know me, I'm George Markowski. I retired in my 30s thanks to property investing, and now I lead and teach over 3,500 Australians exactly how to achieve financial freedom. And this is the part at the end. So I recently did a post about Labor's hidden trap from Jim Chalmers. Now, I don't know if a lot of people are familiar with this, but Labor want to tax unrealized gains, right? So let's cut through it. Basically, imagine being taxed on potential increase in your property's value, even though you haven't sold it. This is exactly what this policy entails. It's like being charged interest on a loan you never took out. Not only is it unfair, but it's economically reckless. Because today they're talking about super balance of 3 million. Tomorrow, who knows? But without indexing to inflation, then what happens is everyone is going to get to that bracket anyway. So I think it's a really stupid idea. And type in the chat what your thoughts are, if you're happy about this. Because, there's some people going, oh, well, they've got $3 million. We should tax them anyway. Why not? The thing is, if unrealized gains, the only way to pay the tax is if you haven't got the money, you have to sell your asset. So what happens there is then people start selling the asset. And then you're dropping the value of assets if people have to sell in order to pay for unrealized gains. It just doesn't make sense. Now I'm going to go through the state of the nation. State of the nation. So why Australia sucks at building homes? It's a lot of questions. It's a question a lot of people have been asking, and what I'm going to do is I'm going to dive deep and go through this to show you what's happening, and maybe we can find an answer. The government hasn't found an answer, neither has the industry. But while labour productivity across the economy has increased 24% over the last decade, this metric's fallen by 40% in relation to overall housing construction over the same period, and by 25% for detached homes. So what does that mean? Well, the people in every other sector in Australia have become better at producing more with the time they put in. But people in construction have become worse and they've actually fallen, which is fascinating when you think about the rest of the economy, how people have become better. Because you look at the whole economy here and productivity, right? And you look at the black line here, the whole economy, you can see productivity keeps going up as a nation. And the reason productivity keeps going up is because we've got more technology, we've got better systems, we've got more skill, and people just get better at what they do, right? Because you think about it, when you're an apprentice and you start a job, your labor productivity is not going to be too high. But when you become an expert, your labor productivity becomes better. So what that means is basically people get better at what they do. But if you look here at the high density construction, our productivity went right up and then it's just dropped. Dwelling construction, see that blue line, it's gone right down, and housing construction's gone down. Isn't this fascinating? I've got a theory. This is my theory. The government are doing a lot of big infrastructure projects that are paying big dollars. So what they've done is they've sucked out all the really good talent out of the construction industry, and they've gone into the other place because they can make more money. So what's left over is people that aren't as good, that can't chase the big dollars. And I think that's what's been happening. What's happened is as the labor productivity has gone down, there's also been a corresponding decline in number of homes built per hour worked. And when you look at that, if you're building less homes per hour worked, that increases the cost of building the house. So the productivity decline results in higher cost for construction as more labour is required to produce the same amount of housing. Also, what's happened is the average time to complete new housing has increased significantly. Why does this matter? Well, one, it takes you longer to get your property, but two, it matters because if you're a developer or a builder and it takes longer to complete a project, it's actually cost you money. Every day you don't complete that project on time is cost you interest, which adds more cost to the project as well. So that's why a lot of builders have gone broke, is because of this labor per hour thing and also blowing out the time frame and them not being able to cut it. So the developers and builders that are doing well, they have got everything dialed in really well, and their cost per hour has gone down instead of up, but also they finish their projects quicker instead of slower. So look at this. This is interesting. Since 1994, the construction sector has expanded at a much faster rate than the population of the sector, growing by 126% compared to with 49 for the broader population. So we've actually got more construction workers than ever here in Australia. So the population is that blue line, and the yellow line is in comparison construction sector workers. And as you can see, since around 1994, 95, we've been going up and up and up in regards to that. So Australia had one of the highest numbers of construction workers per capita in the OECD in 2023. Have a look at this. So in Australia, 5.2% of the population is in construction. If you look at Canada, it's only 4.1. New Zealand is actually higher than us, 5.8. And then you've got United States, 3.6, 3.1, United Kingdom, and the average is 3.3 and 3.2. So as a nation, we've got a lot more construction workers than any other place except for New Zealand, probably in the world. And what does that mean? Well, the main reason is because we have a lot. So you look at these countries here, you look at Canada, New Zealand, and Australia. Those three countries specifically have a lot of immigration. And you can tell because they need more construction workers to build more houses for the immigration coming in. So Australia's housing shortage is worse than we thought. So the rental crisis could last another 15 years due to lack of supply relative to the nation's strong population growth. So it's projected to worsen by 79,000 dwellings over the 5-year housing accord period. So we've got housing demand and then we've got net housing supply. And as you can see at the moment, there's a massive gap. And they expect that gap to close over the next 5 years. That's what they're hoping to. That's their projection. I call BS on this. I don't think it's going to happen. And I'll tell you why it's not going to happen is because we've never hit our target in history, ever. Since Albo put it as a target of 1.2 million houses to be built, we haven't even come close. So Australia's cumulative housing shortage is forecast to be around 300,000 dwellings. Based primarily on forecast population growth, the cumulative shortage will only worsen over the coming 5 years. So this is the current forecast, 300,000, but it's actually could get worse. Why? Construction is so poor. Reason one, construction costs have increased by more than 40%. Reason two, the official cash rate of 3.85% is significantly higher than 1.5 official cash rate when that was in effect in 2017 when construction peaked. So our construction peaked in 2017. Our cash rate was 1.5. And the reason being is when you've got low interest rates, it's actually easier to work in construction because if time blows out, you've still got the opportunity to finish a project without it costing you too much and just easier to get finance. And number three, builders are competing with government infrastructure projects for scarce labour, as I said earlier on. That's the three reasons. So you can see where our cash rate is at the moment, up here at 3.85. And they are predicting there's going to be 2 or 3 more rate drops. But when you look at it, it's not too high. You compare it to 2007, how high it was there. So Aussie house prices are tipped to boom. Bullock admitted that the RBA board had considered cutting the official rate by 0.5 at its Tuesday meeting, but it wasn't the strongest argument in the room. As a result, the majority market participants are now expecting 3 more 25% rate cuts by the end of the year. 0.25, not 25%, 0.25%. So Bank of Queensland chief economist believes a 10 to 15% price increase over the next 2 years is a safe bet, regardless of how many rate cuts the RBA delivers. Domain said that houses could jump by 12% next 2 years if the official cash rate is cut by 1.5 from its peak of 4.35. The auction clearance rate of 71% across the combined capital cities is the second highest early result this year. And that's such a strong result because auction clearance rates actually track with housing prices increase. Have a look at this graph here, right? So home prices tend to track auction clearance rates. The RBA's rate cut has boosted the market, which should lead to higher prices. And you can see the graph here. The blue one is auction clearance rate, and red is quarterly price growth. And you can see they track quite a bit. And what happens is when auction clearance rates drop, prices drop. Auction clearance rates go up, prices go up. Now, Sydney challenges the world for the most expensive housing market. Sydney's median house price is $1.69 million at the moment. And you look here, it's the second highest housing market in the world, apparently. But there's a caveat here, which we have to say. So you look at this graph and it's like, oh my God, Sydney's so expensive. And look at that, it's almost as expensive as Hong Kong. The thing is, we're not comparing apples for apples. Australians have much bigger dwelling sizes than anywhere else in the world. So that's another thing we need to consider. So even though our median house price is high, our medium size of house is much bigger as well. So therefore, we're not comparing apples for apples. And I think if you put that in consideration, it wouldn't be that expensive. It's still expensive, but not compared to everyone else like that. So what I want to do is I'm going to go through a few member wins, and then we're going to go into our private group. So part of our group and what we do, I suppose, Positive Property, is we do a thing called group by advantage. So basically, when you're buying a property, when you're on your own, it's hard to negotiate the right deal. To do the due diligence is very expensive if you're doing it for one property. You're not going to hire a team and spend 20 grand on doing due diligence for one property. It's not worth it. But when you do a group, then it makes more sense to be able to do the right due diligence. And then you got better negotiating power, so you never overpay. And that's one of our promises here, that we never overpay for a property because we go group buy. Now, does that mean you get wholesale prices? It doesn't mean you get wholesale prices because property, good quality property, you're not going to get a massive discount for. But the one thing you don't want to do is you don't want to overpay. And that's the number one thing you want to do. What you want to do is you want to pay the right price where you know you're going to make money, because that's the best price that you're going to pay, right? Because when you're buying a property and you're establishing relationships, business and property and investing is all about win-win relationships. A lot of people don't get that because they think it's a win-lose. You go in, negotiate, and try to screw the builder and get a better deal. Well, the thing is, you screw the builder too much, they're going to go broke, and you're going to get a worse deal. And if they're willing to give you a really good deal and discount their property, well, what is the one thing you're not seeing? So when buying property, you really got to be armed with the right information, with the right team to be able to negotiate. And when you're part of a buyer's group, you've got buying power. When you've got buying power, then you get the right deal every time, especially when you've got people like Adam and myself negotiating on your behalf, because we know the market better than the developers and the builders. So we did a small group of properties in, I'll have a look, Morayfield. This happened probably a year and a half ago. Is that right, Billie?
Yep, about it.
Yep. Yep. And what I want to do is, because we do, 20 property deals a week, we can't go through 20 people every week. It's going to be crazy. So what I've done is I pick a few random people out that I can go through and highlight and celebrate their success. So if you're not on this list, don't worry. We think you're doing a good job as well. But I choose a few people at random just so you get a bit of a feel and see what's happening, because it's good to keep a pulse in the market. And what I want to do is give people these updates so then you can see what's happening. Because, I want you to type in the chat before I go through this is, what would you consider? I'll stop the share for a second and I'll get Kimberly to share that page in a second for me so I don't have to try to control it on my computer. I want you to type in the chat and tell me, when you look at a return, what's a good return on your money? I know in the bank, what's a good return in the bank? That'd be interesting. I think if you get 3% in the bank, that's pretty good. Let me have a look. What's the top? Does anyone know what the
Audio thinks 20% is pretty good.
Yeah, 20%. Yeah, no, but let's be real. Let's be real. I think what do you get in the bank at the moment? If you leave it there for a whole year. Let me ask chat. This is the beauty of having chat.
5.9.
Let me ask chat. ChatGPT, currently in Australia, if you put money in a 12 months in the bank, in Commonwealth Bank, what is the current interest rate, retail interest rate that you will receive?
Adam thinks 10% was good. For average 5% return on shares.
Shares. Okay.
Damien says a CD would have better returns.
Well, look, put it this way. Basically, shares return between 6 to 9% a year on average over the last 100 years. Right? So 9 is actually good. 9%. If you look at some of the top funds in the world, if they get 9 or 10%, they're going to be posting all over the world going, this is amazing. Would you agree? And a lot of people say it's great. And, people are chasing, 5%, 7%, 10% if they can get it. But I want to show you the power of leverage and the power of the top 100 and what sort of percentage we get. Let's have a look at this one here. And if you're in the room, I'd love to hear from you as well. So I've got Russell from New South Wales. He bought at Morayfield in 2023. Price was $465. He paid $46,500 deposit. Current value is $575,500. So his return on investment on the money he invested is 237%. Now, how's that for a return?
That's pretty good on your money.
Pretty good. Pretty amazing.
Yeah.
Those sort of returns you just don't hear about. And I'm not making this stuff up. This is real. Russell's a real person.
Yeah.
And he's a yellow belt. So yellow belt means he's got two properties now. Now let's go to the next couple. And I think Steve is actually in the room, which is great.
He's in the house, yes.
Okay, Steve's got an orange belt. He bought for $440. He paid $44,000. His property's worth, I'm going to get Steve on actually. We're going to talk about this. His property is now currently valued at $574. So he's made a 304% return on his money. Now that's phenomenal. Good photo of you there too, Steve. Do you want to just, Kimberly, do you want to stop the sharing and put Steve on? Hey, Steve. Good, mate. Looking good. How you doing?
You.
So look, Morayfield.
Yes.
What an amazing
When you said Morayfield, I was actually excited to see that.
Yeah. So 300% return. Now, that's not your average return, is it?
No, that's crazy. I knew that it had increased by a considerable amount. And it's only been, like you said, a year and a half. So
yeah. So 300% in a year and a half is pretty amazing. And this is the sort of stuff that we're doing. And, Steve, we sort of, I want to talk about your journey here. We showed you Morayfield. We did a group buy. You looked at the property. How did you feel about it at the time? Did you think it was a good deal, or you thought it was okay, or you're like skeptical? I don't know. I'm just curious.
No, definitely. No, I thought it was a good deal. It was in that time period where things started to go up as well, like when it was in completion and everything. So, but it was still a good deal in the end as well. So that was our second property, because we had got one in our SMSF. So no, it's fantastic, and it's doing well. The rent's gone up as well. So
oh, the rents have gone up. So is it now? Is it positive or negative per week? The holding costs?
It's still negative, only because of obviously interest rates and everything as well. And body corporate's gone up and things like that. But but it's still basically at the same negative amount, which is affordable.
Okay. Okay, exactly. Because you did the cash flow calculator when you did it, and because what we normally do is we pick the property, the top 100, we do the cash flow calculator, and we go, okay, can you afford it? And I'll say to people, if you can't, don't buy it, because But the thing is, with property, it's all about, because I say to people, if you haven't done this already, your number one goal should be to replace your income through property.
That's right.
I think that's what a lot of people in our program are doing. And then what you do is calculate how many properties you need, and then you go and buy them. And the thing is, you purchase them, you accumulate investment properties and build your portfolio. And what happens is you build early on as fast as you can, and then sometimes you get stuck and you wait for interest rates to go down and your equity to go up and your rent to go up, and then suddenly you go back in again. And once you've got enough properties that's all you need, then you just wait. And they're doing the work in the background, right? It's called passive income, because
exactly.
How much money did you make out of that one? Do you have that number? Kimberly, do you want to type it in the chat?
So we just recently refinanced that one as well. So now it's sitting on its own. It's its own security for the loan, and now we got that equity back. So the equity is back with us in order to get ready for the next one. But I'm kind of veering off because I'm going maybe going to start my own business. So that's getting to a pointy end, which we can have a conversation about afterwards. Another time.
Okay, absolutely. I'm happy to talk about it in the private group if you want to, and do some coaching there. I know a lot about business. So you've made 134,000 passive income, right? So that's pretty good for doing nothing.
Oh, 100%.
Yeah, excellent. Okay, thanks 100%. For sharing. I really appreciate it. One quick one. How there's people on our live stream right now watching us, right? And some of them are curious and thinking, is this the real deal? Does George walk his talk? What would you say to him?
Definitely, 100%. So we've been there. We've met you we went to your live in South Australia. We also went to Bali. We've met all the other members and a lot of other members as well. You definitely walk the walk and talk the talk, and hold our hands. Billie is an absolute amazing person and assisting with everything. We can't be over. We're so appreciative with all the help. Basically held our hand through the whole process, and so it's like what you said, it's not a straight line. It's going to go up and down, and you're going to learn and everything from it. But being, I've talked it up. I've referred other people onto the program as well. I think everybody should be looking at that. So
excellent.
Definitely appreciate it for everything.
Great. I really appreciate it. Thanks.
He's really taken the investor hat and
put it on. He's joined the body corporate of Morayfield. I think you might still be on there. Helped save a lot of costs there as well. They were going to do some increases, and being on the body corporate, Steve was able to see that, renegotiate, and stop that from growing exponentially too fast. So it's a great learning thing for you and for other members as well, to really take the reins of your investment and be part of that. Well done.
Yep.
Excellent. Yeah, thanks for sharing. Now, for people watching this live, you maybe haven't met Billie before, but Billie's our client success manager, and she basically makes sure shit gets done and nothing gets missed, and you don't miss out on your investment property. So she keeps on the whole thing because it's quite a complicated project. There's not many people like Billie around that can actually put it all together like this. And Nick just mentioned they should cast Billie in bronze. I love it.
I like diamonds, darling. Thank you.
Oh,
Yeah,
Alicia,
I'm a next
Alicia
step.
said
I'm
Billie,
definitely a next
Billie
step
should get
person.
gold. No, I understand what you're saying. Billie and bronze,
Thank
it's
you.
sort of rhymes. It's great. Excellent. Thanks,
Yeah,
Steve. Okay,
thank
I'm going to
you.
continue on.
Thank you.
We're going to go through a few more member success, and then we're going to go to a private group. Okay, Dave and Louise, they're on their purple belt. How many properties is purple belt? I'm curious. And they got 559% return. Sorry.
6 properties.
Okay, there you go. So there you go. So another great result. And then we might have one more, or that could be the end. Jenna from SA. Jenna is actually one of our coaches. And it's wonderful to see our coaches actually on the program and doing it. So she made a 459% return on her deposit of 44,000 and current value 642. And she's a yellow belt now, which is great. So awesome work by everyone. It's fantastic to take the courage out. And before we end this live stream and go into our private group, I was going to talk about interest rates and why dropping interest rates could cost you money. So dropping interest rates, why they could cost you money. I'll tell you why they cost you money. Because this is what happens. When interest rates go down, the market gets hot and people jump back in. It's already happened. Auction clearance rates are up. And the reason they're up is because interest rates have gone down and market sentiment's gone up. See, what happens is there's a lot of these people out home right now watching this, you watching this now, sitting on the couch or sitting in somewhere, and I call them the armchair investor, where they invest but without actually doing it. And I've got a little story about that because there was a guy he went to Vegas and he wanted to go to Vegas, but he didn't want to lose any money. So what he did, he decided to play the mind game. I don't know if you ever played this game where you go into a casino and you look at a number and you pretend that you're betting on a number, but you don't actually put any money down and then see if you won. So he kept playing the mind game all night and he didn't lose any money, but he lost his mind. Anyway, so basically, a lot of people out there are waiting, sitting around, waiting for more information, waiting for the signs to come that the boom has started before they jump in. And what happens is, invariably, they miss the boat. And when they miss the boat, they lose money. Why do they lose money? Because as you saw in Moorfield, the property worth 440 a year and a half ago is now worth 685. So now to jump back in the market makes it a lot harder. And some people get priced out of the market and never get back in. So you've got to be careful about that. So if you want to take advantage of dropping interest rates and you're watching our live, what I'd like you to do is type in, if you want some help, you want my team to personally reach out to you, type in #interest and my team will reach out. Thank you for watching. Now I'm going to go in our private group and we'll do our Q&A and dive deep. Thank you.